Why Warren Buffett loves boring investments. Imagine you had a choice. You could invest in a company that dominates the headlines, launches exciting products, and has investors arguing about its future every day. Or you could invest in a company that sells something people barely think about. Something ordinary. Something predictable. Something almost painfully boring. Warren Buffett would often choose the second one. And that tells us something profound about investing. Because Buffett isn't trying to predict which company will become the most exciting company in the world. He's trying to find businesses that can keep making money long after the excitement disappears. Think about Coca-Cola. There is nothing particularly thrilling about a bottle of Coca-Cola. You don't wake up wondering what revolutionary technology Coca-Cola will invent next. People simply buy it. Again and again. That predictability is exactly what makes the business interesting to a long-term investor. And here's the part most investors miss. Boring isn't the investment thesis. Predictability is. Buffett doesn't buy a business because it is dull. He looks for businesses that are understandable, financially strong, have durable competitive advantages, trustworthy management, and attractive economics. The boring part is almost a side effect. Consider See's Candies. Selling chocolates isn't exactly the kind of business that makes Wall Street analysts lose sleep. But Buffett recognized something more important than excitement. Customers loved the product. The brand had pricing power. Demand was relatively predictable. And the company could generate substantial cash without constantly requiring enormous amounts of capital. That is the kind of business Buffett loves. Because investing becomes much easier when you don't have to predict the unpredictable. Think about your own life. Would you rather lend money to someone whose income changes wildly every month, whose spending is impossible to understand, and whose future plans are constantly changing? Or someone with steady income, controlled expenses, and a reliable history of paying you back? The second person isn't necessarily more exciting, but they're easier to trust. Businesses can be the same way. And there is another advantage to boring investments that has nothing to do with spreadsheets. They can protect you from yourself. Investors are naturally attracted to excitement. A stock doubles and suddenly everyone wants it. A new technology appears and people start imagining enormous profits. A dramatic headline appears and investors feel compelled to do something. Buy, sell, switch, predict, react. But great investing often requires the opposite behavior: patience. Buffett has repeatedly emphasized the importance of temperament. You don't need to constantly react to every market movement. You need the ability to remain rational when everyone else is becoming emotional. That's where boring businesses can become psychologically powerful. If the underlying business is simple and predictable, you may have less temptation to constantly second-guess your investment. And that matters because compounding doesn't need excitement. It needs time. Think of a tree. Nobody stands beside a tree every morning demanding that it grow faster. You water it. You give it enough sunlight. Then you leave it alone. Investing can work the same way. The objective isn't to find something that makes you feel brilliant every week. It's to find something capable of becoming more valuable over many years. But there's an important warning. A boring company isn't automatically a good investment. A declining business can be boring too. A terrible company can have a simple business model. And even an excellent business terrible investment if you pay far too much for it. The real Buffett lesson is deeper. Don't confuse excitement with opportunity. Sometimes the most powerful investment is hiding in plain sight, doing something ordinary, serving customers repeatedly, generating cash, and quietly becoming more valuable. While everyone else is searching for the next big thing, Buffett's mindset asks a different question. Not, how exciting could this become? But, how reliably can this business continue doing what already works? That shift in thinking can completely change how you see investing. Because wealth isn't always built by finding extraordinary things. Sometimes it's built by owning extraordinary economics inside very ordinary businesses, and having the patience to let time do the heavy lifting.